Good morning, guys and girls. Today we're going to be looking at SPY again. So I haven't loaded a couple videos, or I haven't loaded any videos in the last few days. I actually have only been trading very little. Actually took some losses, a couple losses, and then a good gain yesterday. But we're going to talk about this market on the SPY, on the S&P 500, and how it looks right now and where it could possibly head down to. So what we're going to do is we're going to just do some simple Fibonacci's just to see how low this market could go after yesterday, what happened. So if we actually go from our high point here, with our Fibonacci tool, go down to our low back from February 10th, looks like of last year. And then we can go down to next high, down to this low, and another high, down to this low, and another high, down to right that one here. Another high, down to about here. Okay, so you can see we have lots of area of consolidation that could occur. So we're going to ramp our triangle bar, or rectangle. We've got area consolidation right in here. So we could trade down to. Got this area here, consolidation, we could trade down into. And we have this area here, consolidation we could trade down into. Those are all pretty significant. And then we have this major one right down here. We're going to say the 233 level. These are possible areas where we could trade down to. Remove drawing, Fibonacci. Go through and remove our drawings, just make it a little cleaner here. Fibonacci. Remove drawing. And remove drawing. Okay, so if we go back into our overall, since that February 2nd part, I need to actually change back to our Fibonacci tool. Bam. Bam. Okay, the overall market usually retraces back to a period between the 50 and the 61.8 Fibonacci level, which is right down in here. So this could be a significant area of where the markets could go down to, anywhere between the 244.96 and 232.68. That's pretty big gap though, so I'd like to see that a little bit tighter, but for now this is what we have. Over here, and we're going to go down to the 5-minute chart. And we're going to zoom out, or zoom in. If we look on the overnight, this is our close yesterday at the 264.18 level. I have at 264.15. That's okay. So we can see price overnight on the overnight session has come down from that level. So we're going to have a bearish gap retest that we'll be doing today when we actually do trade. So we're going to be looking for price to come up a little bit, and then we're going to watch for the drop off. Where's our next target zone is the next question. Zoom out again. So I see today we can probably go down to the 246 level, if not down to even lower at the, yeah, we'll call it the 246 level, 245.83 roughly. We could trade down to here today, and it could possibly go lower based on yesterday. It could drop all the way down into this big 50 to 61.8 retracement level. So we're going to watch the markets when it opens up, and we'll see you then. Okay, we're back. We're watching SPY. The market opened about 7 minutes ago. So I'm just waiting for the candlestick reversal to appear, which I think it's going to happen right around this 264.15 level. And we'll check out the options prices and see what we can do. And just a disclaimer, I am not a professional trader. Please due diligence at your own risk. Know your stocks that you do trade and ETFs, any options, know basically what you're getting into. Do research, do your own research, and don't risk any more money than you can lose. And keep risk management at a high level. Don't want to lose more than 2% on your account on any trade. And always look for targets around 2 times the risk factor. So if you're risking 2%, you're looking at a 4% gain basically. And based on the daily chart, where we did our analysis earlier, I'm actually looking at the 244, so we're going to say 245 puts, but I'm actually going to go down to the 240 puts just because they're right down in this area here, and that's kind of about the median point on that consolidation area. Okay, I want you to see what's happening here at the 264.15 level, which was the close of yesterday. As you can see, it's starting to hit a little bit of resistance here on the 5-minute chart. So as we're going to look for is an indecisive candle, which it looks like it's starting to form, and then we're going to wait for the price to pull back down, and if it goes below this low right here, I'm looking at buying. I'm actually going to bring it down to this 200 moving average for an entry. So we're going to put a price mark in there. I'll say 261.66. And you can see that bar is forming very nicely right now. Here we can see the candle is formed. It's a very bearish signal on a reversal. So we're going to wait until this bar drops below down to our 261.64 level. The main concern with this trade is that all of the EMAs, the 8 or the 5, the 13, and the 50 are all moving up, so we might not get in this trade today. And that's okay. You don't have to trade every day. Okay, I go into the 15-minute chart. It looks like buyers are coming in to, I guess, save this market. I'm not sure what's going on. Waiting for a rollover now on the EMAs, and it looks like it might actually get up to this 200 EMA and then possibly start rolling over. So we're just gonna keep pausing the video until we get a good trade set up, and if we get into a trade, we do, and if we don't, we don't. Okay, we took out the extended hours just to get a better view of what's going on just particularly today. The extended hours were creating too much noise on where possible resistance and support levels were. You can see here the 5 EMA and the 13 EMA. Looks like it's going to be a cross. It might even continue going to the upside. This is our 50 period EMA. So either this is going to start breaking down right now and we're going to get into this trade, or we're basically just going to hold out for another day. Right now I'm looking at this candle to be indecisive, next one to form another drop, and then when it drops below, we're going to say the 265 levels where we're going to actually buy in at. Let's say 264.75 roughly. This is also forming a tweezer top, and you can see like previous tweezer tops now just kind of tanked yesterday at the end of the day, and here we have a tweezer bottom. You can see the market went up, so we have a tweezer top here. Could be looking at the same thing. Plus this is an engulfing candle, and so is this one. Okay, you can see our tweezer top is formed, and that's usually when the top of the price between the two candles is within a penny, which it is here. We're expecting this candle to go down actually, and if it does, then we'll be looking at getting into this trade on the February 7th weekly SPY 240 puts. Okay, just as I was watching, I was waiting for this candle to come down, and it did not. You can see that the 5 period did cross over the 13 period EMA, and it looks like we're going to go to the higher side here. I'm not going to chase the trade. I personally don't feel confident in the bullish sentiment right now. I am playing this more bearish, and if we go on the daily, I'll show you why. Coming up here, it's been a good morning for the bulls, but unfortunately with this drop yesterday, I see a little bit of a retracement and then coming back up. So I think the market's going to basically come down, come back up a little bit, and then come back down, and then drop further down to our 240 level that we're talking about. So I am not going to take a trade today. It'd be nice to, but unfortunately I just don't have confidence in the market right now, and it's really volatile with buyers trying to come in because now the price is low, but the sellers are still trying to get out because they were trapped from yesterday and took a significant loss yesterday, it looks like, unless they got out in here. But it depends on how long they've been trading and how long they've been holding their position for. A lot of hedge funds coming in right now trying to save this market. And if we go back to retracement, let's go to Fibonacci. And we'll go to this low here at 241.83, up to the high of 286.63. Should automatically pull. Roughly in here. We can see it did drop into the 50 to 61.8 retracement level on that. So could be a considerable pullback, and it could go up again up to the looks like the 38.2, and then possibly move back down. But we'll just have to wait and see tomorrow. Thanks for watching, and I know this isn't the best video, but we'll come back at it tomorrow. Thanks for watching.